Let's now get your fundamental view on the market. Joining us on Street View at Lunch is Gaurang Shah from Geojit BNP Paribas Financial Services. Afternoon, Gaurang, and thanks for joining us on the show. First up, what's your call on the market? Do you think we're near a bottom, or do you think we're still far away?
Afternoon, Sandeep. Well, we have made the lows, and where we are trading right now in terms of valuation, and if you don't look at in the next 2 to 3 months what happens, I think from an investment 12 to 16 months time horizon, one can definitely start nibbling into stock-specific, sector-specific ideas. Depending again upon the risk appetite, we've been advising 25, 30, 50% exposure. A lot will depend upon the news flows, and they are not yet over, whether it is from the domestic side or from the global arena. But to, again, time the market, whether we've made a bottom or not, very difficult to say. One cannot rule out another 5 to 10% downside on the indices from the current levels, depending upon the news flows. And of course, as of now, the rupee is holding against the dollar at 56, 56.50 on the weakness. And again, we're seeing some strength coming back. That's also going to play an important role. The silver lining is that the crude has corrected to the lowest levels that we have seen in the recent times, and that could possibly soothe the sentiments as of now. But yeah, some stock-specific, private sector banking, selective four-wheelers, two-wheelers, metals, possibly mid-cap pharma, are some of the areas where we've been advising clients to get into.
Gaurang, you just talked about nibbling in at the current levels. What stocks are you advising to your clients?
Well, a mention was made just a while back about Tata Motors. We feel close to about 220, 225. The downside becomes very limited, and we are maintaining our buy call, Aisha, of target of about 360, again with a 12 to 16 months time horizon. And the private sector banking, Axis, ICICI and Yes Bank, these are the private sector banks, and we have been positive on the private sector compared to PSU banks. In the metals, which has seen a tremendous downside and been an underperformer, Tata Steel close to about 380, 385. Again, your downside is limited. A mention of Kane was there a while back, I think close to about 300. There also a downside is limited, and the thing is that crude has corrected, let's face it. But then again, like Sandeep was mentioning, if there is quantitative easing, if there is more currency supply in the Eurozone and the US, the demand will pick up for crude also, and that's when you'll see a momentum being built up on the upside on Kane India. So these are some stock-specific ideas that we've been sharing with our clients.
Gaurang, how would you read the future Warburg deal? Well, the initial reaction of the market is positive, and understandably so. But obviously debt concerns continue to remain as far as Pantaloon Retail is concerned, because this knocks off very little debt from the company's books.
Yeah, very rightly mentioned, and I think any fund that is going to come into the company, I guess primarily the use is going to be to reduce the debt, and no additional incremental capex plan as of now is what we see. So we've not been very bullish. We've not been recommending our clients. Both the stocks, Future Capital and Pantaloon, have been news-driven. I guess we saw a little bit of upside post that announcement of close to about 260, 262, where the deal will take place. We saw the stock giving off the gains that it had made in the morning session. So we've not been advising to do any momentum play or do a kind of a BTST call. They're better stocks. In the retail, if you ask me, Sandeep, we are too comfortable with stocks like Shoppers Stop and Trent from an investment angle. So we've been advising our clients over there.
Gaurang, there are talks about as to how RBI's rate cut move may be preemptive to, as soon as the June review. Do you think that is the possibility? And if that were to be the case, should one start nibbling into rate sensitives besides autos, that is?
Yeah, we expect, Aisha, a cut of about 25 bips on the repo. I think CRR will be left untouched because a sizable amount of cut was done the last time before. So yes, one is expecting at least 25 bips cut. And as far as the interest sensitives, NBFCs play is concerned, we have recently covered two stocks in the same category. One is Bajaj Finserv, and the second one is Shriram Transport Finance Corporation. Both the companies stand very tall in terms of performance, and both of them have a sizable amount of market share. But again, the rate cut will depend upon the arrival of monsoon, food inflation, agri-commodities, whether there is any cool-off, etc., etc. Yes, but we are expecting at least 25 bips cut in the 18th June review.
Right. What about defensives, Gaurang? Would you look at picking up any of the defensives in FMCG or pharma?
FMCG, other than the vanilla names like ITCs and the HUs of the world, the Godrej Consumer, again, we have recently come out with the buy report. I think the kind of product profile they have, the acquisitions they have done, give them a good combination of mix and of course the geographical reach, that those products over here, their products over there. We feel that the pricing power has been also there, able to maintain the top line, bottom line, and have been able to pass on any price increase because of cost input. In the pharma pack, we have a reduced on Ranbaxy amongst the front line. We are maintaining a hold on Dr. Reddy. But amongst the mid-cap play, I think we have a coverage positive on Glenmark, Divi's Laboratories, Strides Acrolab, and Cipla. And I think Cipla comes out with the numbers tomorrow.